Welcome back, guys. This is a video of me showing you my secret strategy I'm using on a day-to-day basis to absolutely milk the markets in 2024. So if we look at German 40, this is the pair that we're looking at. It is Pep by Pepperstone. You can see that price started to pull up quite aggressively yesterday. What is important to identify is always the overall flows of the market. I mean, we can see that price has been selling quite some time. If you don't know German 40, it's an indice and it's a beautiful indice pair that you want to be trading in the London session, because it is a German indice. It's a European indice. It's very important to understand that. So you'll find a lot of volume in the London session, and this is why I tend to want trade it. So if we look at price, right? Yesterday it started to pull back the day before Monday started to pull back quite aggressively. And then it started heading to the top side. So market open at 12. This is where we started to cap out almost the top side movement. So this is important. Then 2 o'clock, it really pushed to the top, almost the high of the Asian session. Okay. So then it started to pull down a little bit more. And then as we can see, we can almost kind of mark out the Asian session low. Okay. So this is, we haven't woken up yet. This is 4 in the morning. So usually we'll identify this area around 8 o'clock. Okay, which we'll see over there. So now this is about 7 o'clock, 8 o'clock in the morning where you've waked up. So now what I tend to want to do is I mark out that daily low, that daily and that Asian session low. It's important to understand this because this is a key factor when looking at the German 40 charts. Okay. So as we can see, your price started to pull back around 8 o'clock, right? Now what I do, and it's very important, is now at London session, it opens at 9 o'clock. Okay, so when price pulled up, now I start making out the daily session high. Okay, so this is the Asian session high before London session opened, and it's pushed to the top side, and you can already see markets struggling to push even further up. Okay, you can also identify these areas a bit better with zones. I do have a zone here, but just for the interest sake of the video, I left it out. Okay, there is a zone where this 8 o'clock did tap into. So now as we see, it's 8:30. Now what I like to see in German 40 is that pullback, that sweep of liquidity, because it's important, right? Price 10 to 1 starts to sweep liquidity of the high or the low first, and it goes in the opposite direction where you can 10 to 1 catch these moves. Okay, so this is what I look at. So we've marked out the daily low, we've marked out the daily high. We want to see price at 9 o'clock almost pull back, grab liquidity of the high, because remember, overall flows of the market is bearish. So we kind of want to be selling in this momentum. So it's been bearish, it's come down, it's pulled back a little bit, but don't worry, 9 o'clock open. This is kind of what I want to see. I want to see it come, grab liquidity, and start pulling down and breaking structure, and then aim for this low area over here, because that's, like I said, people are greedy when they want to enter the markets. They want to have the best position. So you will see that they 10 to 1 start sweeping the highs and the lows of the Asian session. So as you can see, that's what I'm wanting to look for. Let's just see what does happen. Okay. So price opens, boom, 9 o'clock over there. What did it do? It literally swept liquidity. So while I'm on this chart, I drop down to the 5 minutes, and we can see that, hey, the 5 minutes starting to push up. 9 o'clock pushed up, as you can see, but it closed below this low. It closed below this high that we just swept. So what I usually tend to want to do is I take a short position, I enter it with a 35 to even 20 pip stop loss, which leaves us not a lot of area to take a massive loss, right? And then we aim for those lows. So that's a 1 to 4 risk to reward, which is 1 to 4.25, which is absolutely beautiful. So let's just see how the rest of this trade plays out. So it's grab liquidity. We've entered our trade, and the confidences we have it is 1, 9 o'clock swept the high first and not the low. And 2, the rejection and the candle closure of that 5 minute was below the high. So there was not enough bullish pressure to continue pushing that up. Not saying that it can't do that. So then we can see that it started to pull down, boom, and then we had a nice strong rejection to the downside, and then it continued going down. At this point, we're already putting stops at break even. Why? Because it's a risk-free trade, as well as we're in how many pips? We're in quite a bit of pips profit. I mean, we're up 53 pips already just off that simple move at 9 o'clock, and it's only 9:25, right? Then let's see how the rest of the trade plays out. Starts to stall a little bit, and then starts to give a nice little push down again, and then boom. Can you see that? Now we've already taken liquidity. We've grabbed 86 pips. But now this is where we are closing out 70% of our position that we're currently holding. Why? Managing risk, managing your trades is very important. And then the next TP we would aim for is this area over here. This is the Asian session range indicator. It's quite easy. There's not a lot of settings to do. Definitely recommend this. You can just search it on TradingView. And yeah, then let's see the rest of the trade. So at this point, we've gotten a lot of profits, and we're even aiming for the next low, and boom, we grab another entry. That's the area we're watching. So at this point, we've already caught 116 pips, or 1,160 points, right? That's the area we're watching. We want to see those daily lows swept, and we want to see, as price is coming to the Asian session low, what is it doing? We could see that there was strong bearish pressure. There wasn't a lot of retracement. What I look for, especially in these areas, is the 15 minutes and 5 minutes where it is closing. We could see that this 15-minute closed just above the low, which is where I tend to want to close out that 70% of positions, and then I will hold the rest to the last little point here. So if you hold this trade all the way, we would have made 135 pips, correct? Now, we've caught 86 pips on the first daily low, and then holding it to the second TP, which will be the Asian session low. And this is 116 pips, and then holding it even a bit further, it's 135 pips. What an absolute beautiful trade. Like, again, just to go over what I'm looking for, it's those liquidity sweeps. We're watching 9 o'clock, where it's sweeping first. Obviously, price is not going to tap it exactly like this every time. Sometimes the price will liquidate it a bit further, but always keep an eye out for those things. Watch price action and the volume in the market at that time. Let me show you another example. Okay, awesome. So now we've marked out a high, we've marked out a low, and we have two zones that we've been watching, right? Now, so Asian session high, we've marked out. Asian session low, we're going to mark out, which is around about this area over here. At 7 o'clock, we could see that price started to pull up. At 8 o'clock, it started to really pull up from that level. And now these trades, we're a bit more patient, right? So we want to see, either we're going to sell because momentum started to consolidate. We saw that price started to move up and down within this area. So we don't want to be too hasty on entering and holding these trades for quite some time. Okay, because overall flows still bearish, and we are looking to potentially buy because the previous flows have been quite bullish. So we want to see maybe a further pullback of this level. Okay, so this is that overall analysis that we're looking for. Then let's get to what happens in the rest of this. So now price is starting to pull back slowly but surely. It's 8:45, and now we're waiting. So now we've marked our daily low and daily Asian low, right? So now we could have entered the sell because overall flows were still bearish, and we could have entered here. You see 9 o'clock pushed up, but this wasn't according to my strategy. I mean, it didn't sweep the Asian high, it didn't sweep the Asian low first. So we're not going to enter, but we waited a bit more patiently. Remember, we marked out the daily low, previous daily low, which was this area over here, as well as our zone, and we marked out the Asian session high. So what we were looking for was a liquidity sweep of yesterday's daily low, which it did. As you can see, 9 o'clock absolutely plummeted to the downside. 9:15, it pushed to the downside. And this area we jumped in with the live students as well, by the way. So the confluence I had when I saw price selling bearish, right, I entered a buy at this point here because of the simple reason of its sweeping liquidity of previous daily lows, it swept liquidity of Asian lows as well. So now we would aim for the target at the top here. Okay, and there we have 101 pips. Our stop loss is usually 25 pips. 25 pips with a stop loss that small, you can make quite a bit of, open a bigger lot size and make a bit of money on the way up as well, and have such a small loss because of the pip size, correct? So now the confluence I had entering this trade is that spike. We entered the trade, watching the 1 minute as well. If we go to the 1 minute, this is the 5-minute time frame. We watch the 1 minute, we already saw the 1 minute start to reject. It closed above that line. Remember, we marked out the previous daily low. It closed above that line. That's an important candle we watched there. It swept and then closed above that line, not below. Closed above, so we entered on the bullish candle that swept one more time down. Didn't even get close to our stop loss, as you can see on the 1 minute. Let's just jump back to the 5 minutes. And an interesting thing that I was watching is, because This 5-minute candle at 9:20 opened and didn't have a bullish wick. I know the market 10 to 1 always creates wicks on both sides of the candle, whether it's bullish or bearish. So now we see that price has pulled down. I didn't see there was a bullish candle, so I took my trade expecting that there would be a pullback to at least fill out that candle. We took the trade with a stop loss of 25 pips, and then boom, it actually rejected and closed above, so it didn't create that bullish candle, but it still closed above. So it gave me confidence in holding this trade. We're in some profits already. So let's just pull this down a bit. 5-minute, we're already hitting strong bullish momentum. Watching this trade play out a bit further, we can see that it started to pull back a little bit. At this point, when it started to pull back a little bit, we just minimize our stops to below this area. Now we have risked a 1 to 12 risk to reward, correct? Because we've just minimized our risk. We just made initial money. So we've seen that price started to pull back a little bit, and then it started to push up one more time, but then boom, it started to sell again. Because it was a bank holiday, I remember this day. And what we did is we were aiming for this area over here. It's important to see candle closures as well. This area over here we were watching, and this was actually, if you check my free signal and actually have a video of this on my YouTube channel of me making this trade, you will see that I sent the signal to the group. And the reason why I closed out of this area is because it strongly rejected off this point over here. I wanted to expect that close above. So this is why it's important to understand that the strategy works, but you need to learn how to manage your trades correctly. So at this point, when I saw that rejection, I closed out 80% of my position, and then I was holding till break even on the last 20% of that position I was holding. Then let's just see how the rest of the trade played out. It actually came back down and swept what it was originally doing. So it swept that area. Luckily, we were at break even. And if you see the rest of the trade, it actually started to pull back up once again. So you could even see this as another downtrend to grab, another trade, and then another trade, which is perfectly fine. But the secret strategy is that liquidity grab of the Asian session low or Asian session high, as well as the previous session daily low and the previous daily high. That's the secret behind it, and it works 85% of the time. As long as you're managing your trade, managing your risk correctly, you can really make profits on this on a day-to-day basis. I hope you guys enjoyed the video. Please like and comment and subscribe. We're going to bring out a lot of educational and more educational videos for you guys so that you can learn. And yeah, keep you guys posted. Make sure to click that notification bell as well. Thanks, guys. Until the next one.